Okay, let's try her again. Good evening, guys. Ken at Tortoise Capital Strategy Podcast for June 10th, 2020. We're going to be a little more efficient on this one tonight. We're going to get right to it. Oh, Snagit has crashed. Really? You're going to do that to me now? Stand by. Juan asked, I still owe you a connection in there, Juan. I'm sorry. I've just been wicked busy. The question was, let me get the whole darn thing is. What are the advantages of TC2000? They make the best charts, have the most indicators, have the best response time, have a great brokerage, have superb customer service, have low cost data that is commercial quality, and are better than any of the dozen charting platforms that I've ever used. So I would list those as the advantages of TC2000. Plus, the commercial advantage of we already have the TC2000 bundle with 30 years of my strategies coded into them already at a very reasonable price. So TC2000 is pretty good. The other platforms that can use this stuff, NinjaTrader, Ameritrade, Interactive Brokers gets most of it. TradeStation gets most of it, but the charts are ugly. And Daniel's Trading for Futures is what I use. So there's any modern chart package should be able to use the indicators that I use, and if they don't, you should get a different chart package. My preference, far and away, not even a close second, is TC2000. So that would be my answer to that. Okay, I got to restart the this just for a moment. Okay, Ken here. I think we're back. Good. I should also say before we go any further that I updated a Patreon posting today for you guys that had all of the June evening podcasts all in one posting, the 1st through the 9th, just to catch up because during the workshop I was negligent in getting them posted in a timely manner. So I think I'm just going to keep maintaining that for June, and I'll just keep adding it to that posting so that you always have that in one package. And then if you use the tags and search for June podcast, that thing should jump up on one efficient screen for you. The Gang of Seven are chewing their way through those things as fast as they can, producing the note sheets. And I just finished uploading the 14 hours of the hybrid workshop to their project space and in the base camp for the hybrid traders. So those of you who are on the weekend workshop, you have the unedited raw video for that on Basecamp in your project area. So you can, if you want to get back into that, you can. The Gang of Seven are going to go through those videos and then produce a detailed timeline. So for every concept, there will be a timestamp on it and a Cornell note sheet capturing the notes as we go. Then in phase 2, we will use that to turn that into a set of concise, structured lessons, and that'll go into the LMS. The hybrid workshop guys will have access to that as part of their package, and then I will be making that available to Patreon Platinum members, and then I will also sell that as a la carte to folks that are just like interested just in that package. And that will complement the supported spring crossing package I put together. I announced yesterday I'm ready to start accepting registrations for the first 20 non-Patreon members at $2,500 apiece for that. That'll be just basic rifle marksmanship for the structured supported spring crossing. The hybrid workshop will be a little bit more for the a la carte people, but that's going to include the other patterns that we talked about in the full workshop. The SSC package is tightly focused on just what you need to know in order to trade that pattern. Okay, so it looks like we're back with Snagit. So let's just jump right into the day today. So we had a minor gap up, and it started off feeling pretty good, and then collapsed, and then got into a sideways quiet channel mostly today, waiting for the Fed announcement. Um, uh, those of you who didn't know it was a Fed announcement today got surprised by that sudden sharp volatility around 2 p.m. Eastern. Um, I'm going to show Neil's charts on that. Neil pulled 6R out of there just by following the rules of the chain trading pattern. And if he had known it was a Fed day, or if I had been not negligent and alerted folks that it was a Fed day and what to do about it, he would have taken even more. But actually, the important thing to note there is that when things get quiet, much like at frog time, if you have your rules in place and you're prepared, those minimum manageable risk boxes protect you against adverse moves if it goes in the wrong direction. But if it goes in the direction you're already trading, you get a windfall gift right away, and then with tightly structured um, uh, exits, you get a really nice package. In fact, I'm just going to show you Neil's charts right now because it is very inspiring, and he posted this in real time with his insights already done. So +1 to Neil for a job very well done. Total deal of the day here was 6 trades, 6.41 execution R. So he's identified a sideways quiet channel here. The Fed announcement, rocket, 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 boom. And he saw the inside bar and took it, had a tight trailing stop right here. And now this is the win for the day. This is the win. I bought what would be seen as a 1, 2, 3 entry. That's correct. I'm going to zoom in even closer so you can feel it as he's doing it. Trade number 1 was a fractional loss. He was in this one here on the long, and his stop got hit before it exploded. So fractional loss. Trade number 2, he saw the inside bar here and bought a 1, 2, 3 entry. And since I had no trust, he says, in this strong of a move, let me back off just a little bit so you can see all his language. I kept the stop very close. He was following on the Z2 as this thing went rocketing up. He was following the fact that the trade was on the Z2, and so he was connecting the lower low or the higher lows of the boxes of the bars. I followed on the Z+2 because I could hear Ken's voice in my head telling me that it runs away like this. Don't let it come back inside the Z2. And so in 6 minutes, he had 5.93 R. He tried for a re-entry here in a perfect place to do it because it could be this. He ended up scratching that one a little bit later. That's not a bad play. On a Fed day with this kind of a move, if this thing doesn't go for you, that's a good exit. That's the PSAR. It's a scratch. You gave it 4 minutes to work. It should have gotten through the previous hump, but it didn't. Notice the lower high. Even when it starts rolling over like right here, I take that one for a fractional win. Like if it doesn't even make a new high and it's crossed the baby dragon, done. Okay. So I like that. This one was a possibility on a collapsing dragon. He does get that one there, makes a nice cover. I don't mind this. I don't mind this try right here, I guess, except you'll notice that the 4 previous bars here reject, and now this little bump right here, it hasn't even gotten hardly out of the dragon, and it's just rolling off. So I think that's problematic. You're entering after it's already crossed the baby dragon. So I don't know. And then that would probably have let you get in this a little bit sooner. And now instead of an exit, that's an entry on the way down. So trade 1, 2, and now we're into trade 3. That one was, trade 4 shorted the collapsing dragon a little bit later than you wanted. So he got it here instead of up in here. But still, that's a reasonable trade. And yellow dot number 2 should have been like falling off a log. Yeah. So that would have been a straightforward one. Trade 6, a straightforward supported spring crossing. He played the standard rules for the PSAR, jumped to Z1, jumped to the Bollinger Band mean for a scratch. This one I might have wanted to lock in a gain here when it makes this surge right here, especially after white knuckling it so much right here, that if this thing gets up to the fair value and starts to roll over, I think I want to lock in some kind of gain. I might have recommended an exit here at that purple dot or here, so that instead of a scratch, you get some little taste. But still, the main point is one really good trade, a couple reasonable ones, maybe one that was missed, and walk out of there with 6R when the rest of the world was shaking in their boots. So I just thought that was pretty well done. Wanted to share. Back to our regularly scheduled program. So again, we started with a fractional move up. Let me use the arrow on this. Sorry. My new small form factor HP computer came in today. It's got tons of power, but I went to hook up my monitor. It doesn't have an HDMI port. It has USB-C ports, and of course my monitor's only HDMI, so I gotta wait till tomorrow to get another adapter. Just that kind of day today. All right. So we have our 10-day look back period. So starting here today, a small gap up, rolled over, sold off pretty harshly, came cruising into the Fed announcement, and then closed weekly. Still taken into consideration, it's still above the hump of the dragon, the peak of the dragon here. So yesterday we had made that move here. Still above support. I'm using the dragon as the support level, the upper skin. So it only has this much wiggle room right now. There's the high of the day. There's the high of the 10 and the 30 days. There's the peak RL270 in purple. There, the Z3 line's a little bit higher. Sorry, should have posted that a little higher. This week we've got these 3 days so far. It just went negative for the week because it opened here and is now closed here. So we're slightly negative on the week. It's still a fairly narrow range compared to last week's big burst up. So it's holding the gains. It's holding above the dragon, but some of that slack just went out of it. This is 2 days in a row with lower closes and lower lows. So tomorrow's the Fisher cut bait day in my view. They want to see a nice strong move up in order to justify holding it over the weekend. Otherwise, we're playing defense and protecting with the dragon. So the 10-day look back period comes here to here to here. Here's the 10-day low made 9 days ago. That's still right at the RL270 long-term fair value here. We have the high of the day, the low of the day, the skin of the dragon, the spine still sloping up nicely. the belly of the dragon, or the lower skin of the dragon here at 309 and some change. The PSAR flip here at 308.3. I'm sorry, 306.3. The PSAR extension is still looking good. So price is still above our three extensions, the RL30, the Dragon, and the PSAR, although we're starting to get into the testing zone right now. Everything's still comfortably above the Bollinger Band mean here, which is at 290, basically 298. And then we have Z minus one in the Dragon belly from over here. We have Z minus one in the Dragon belly solidus support at 286. So still got a lot of gains to preserve for this large move. The RL10, the 10-period regression line, is still steeply up, but it has now come back to the Z2 line. So these last 2 days of just marking time without making new gains, yeah, it hasn't failed, but it has failed to follow through so far this week after a nice start on Monday. So this is becoming a neutral and a weak day. We're still well into the summer here. And the fair value and the Z3 are still within range for this week. But like I said, it's got to get after it tomorrow. Okay, let's take a look and see what worked. Okay, we have the S&P at minus 0.56. What was better? Marginally better was Walmart, healthcare, Asia less Japan, Euro-Asia, clean energy. Some of our tech leaders now starting to emerge. Google, Intel, XLK, Amazon, Apple. I beat the drum yesterday on Apple and Microsoft. Apple's up 2.5, Microsoft up 3.7, Tesla up 9% to break through 1,000. The P.T. Barnum of our generation continues to amaze. It's got everybody hypnotized, I guess. The gold miners and silver, so some of those defensive plays starting to move to the top now. So gold miners at 4.4, wheat and precious at 5.6, treasuries at 1.5. So it was the tech leaders and then the defensive plays. Interesting to note, though, the VIX, which had two pretty good days in a row and was up pretty much today, then closed poorly. So that feels to me like the end of a 3-day tactical move by the volatility players. And I think they tried to crash the market today and they didn't. And so they took their little gains in volatility while they could. So I'm of the opinion that tomorrow, because it failed to fail today, tomorrow could be a really strong move in either direction. So I think there's a higher than normal probability of a nice hybrid frog move working. So I'll be ready for that. Now let's take a look and see what was not as good as the S&P today. So the S&P at minus 0.6-ish. Pfizer minus 0.8. Home Depot, Facebook, discretionary 0.9. eBay minus 1. The Dow at minus 1.1. Materials minus 1. Mexico, McDonald's, lumber, Twitter, real estate. The Russell minus 2.72. I think that one is going to be a nice target for tomorrow. That one could easily have been an overreaction today. So I think that one's going to jump tomorrow. And then EWZ, Brazil minus 3. Virgin Galactic minus 3 as well. And then the big losers of today were the ones we warned about yesterday. That whole basic materials and financial sector and Simon Property Group. So Alcoa minus 3, U.S. Steel minus 3, Cliff minus 3.5, Simon Property minus 4, Energy minus 5, Devon minus 6, Boeing minus 6. Devon Energy and Simon Property Group, if you don't make those part of your daily nutritious diet, um, I don't know what to tell you. We're going to take a look at those today. But when you see how these little guys trade, we've seen them how they trade when they're moving up. Let's watch and see how they trade when they were moving down today. And I just think you're going to like them as targets. If you think about this whole universe of symbols as an ecosystem, and if you think about this select set of symbols that I've shown you here as like the tortoise ecosystem, you're going to realize there's a lot of different places that you can go to make bank. You've got big fat indexes, you got the big sector spiders, you have individual companies that trade smoothly, you have leaders in the large caps to focus on. If that sector is doing well, you can find that leader that's very liquid. And then you got a handful of specials like mid caps, like Devon and Cliff and Wheaton that and Win that really trade beautifully. Sometimes independently of the market, but really trade intraday and on swings in an orderly fashion. So this is an example of what I would consider a portfolio for all seasons for a trader, because you get things that move a lot. You get a lot of volatility in either direction on any given day, and then your job is to find the mover based on how the market is behaving. Market down, go find the weak ones, find the movers and smash them. Market moving up, find the winners and ride them. And if all else fails, just concentrate on those extremes and find the pattern and fit the pattern and then trade the pattern. Okay, that's what I want to say about that. While we're here, we're gonna just take a look at some more beautiful work by Neil today. And this was trading. Let's see which one this was again. Okay, this is DIA on the 1 minute. So this is the SSC challenge. There's an opportunity here to really get proficient, and Neil's taking advantage of that. So he's got a. I like this effort right here because there's a gap down, sold off, pulled back, and then taken off again. Bang. I love the exit even more than I love the entry, because instead of suffering an entire -1, he says, you know what? When this thing works, it's supposed to do this kind of a move, but it didn't. So just cut it. Well done. If it doesn't look the way it's supposed to, get rid of it. Then there's this one. The next shot, I think is premature because I don't. Well, maybe not. Maybe I guess the PSAR just would have stopped here, and then that doesn't work. Another quick exit, and then when it does work, almost 3R to pay for the -1R over here. Here's the opportunity to add the second position. When it clears these two humps right here, here's the next one, and then that 3R probably becomes 5R, given your nice exit right in here. For those of you keeping score at home, once we get through the SSC challenge, now you have the collapsing dragon or the owl, and if this was 4 to 5R, this is 2 to 3R, waiting for you to pick it up. I think, Neil, you're just a little quick on the trigger here. The PSAR had fit. On the other hand, you're seeing support level there. That's not bad. And then as long as you get this one, that's fine. And then I think there's a chance to add another position when it pauses, doesn't even break, and adds again. Now it's above this hump, and you see the Z3 lines have pinched. So I like this or this as a second entry. I wouldn't be offended if you took a third entry, and then we can squeeze some more juice out of this one. The other thing that I'm going to say is take a look at the sizes of those risks, how the size of the volatility enabled you to get out of this one at a fractional loss, even though the dollar figure loss at this was large. So that's one of the things that the PSAR flip gives you, is that accountability or adaptability to the volatility, if I may say it that way. Second thing we'll or another thing, not second thing, but another one we can look at here is, again, once you've mastered that SSC pattern, now you've got collapsing dragons and Z3 pinches to break out on a day when the market was down. And now instead of suffering minus zero point 0.7, you're making bank here. And then I don't mind this exit, I guess, but if we look at that a little more closely, if that thing is 4 or 5 bars in your favor, don't let it go negative. Just don't let it go negative, okay? Ruthless risk management. You can always re-enter. So on this one, where you have a perfect entry, I just want you to see something important here. All right, so when you have that entry and you have an execution risk like this, you have an execution gain in hand, don't let that go negative. If you were not going to tolerate a loss bigger than that, now you've got a gain that big, at least scratch it, okay? At least scratch it. So God, look at the size of that thing. By the time this thing moves up to the far side of the river in 3 bars, put your stop here. Protect that entry from all enemies, foreign and domestic. Yeah, you would love to see that thing get up here to the VWAP, or the RL 270, I should say. You would love to see that thing get all the way up to here. So lock in that gain so that you don't take a minus 0.2R. Just don't take that one. And then if you had a plus 0.26R instead of a minus, now suddenly I bet you end up taking that trade. I bet you end up taking this trade. And here's why you would do that. Because you're getting the same entry as you did here, only now your risk is even smaller. And here's the final thing I want to say. So if you had just played this trade here in this little zone, and you had that much of an execution risk, and then you made a little fractional, and then immediately reverses again, and you buy this right in here somewhere, just as a ballpark, just use the same risk and carry it over. If worst came to worst and you took this exit, again, you haven't lost any money, your psychology is strong, and you buy the next one right here and put your stop here. And you won't lose money on that trade. And one of these is going to hit for you. And if you start getting in the habit of capturing these little fractionals, like this one burst up again and it sold off. You should be exiting here. And now the next PSAR flip and supported crossing you have is here. This is a summer crossing. So that's the next pattern, Neil, I want you looking at. Now you take that same, notice how these things are about the same kind of flexibility, and now you get paid. So supported fall crossing, and in both directions. This one is now an owl. Even if you wait for that to turn to winter now, You're authorized to start making that trade. Now look what you get here. That's kind of a standard unit of risk on the diamonds. Look at that. It's 30 cents. So if you're trading one contract in DIA, 30 cents is a risk of $150 on a single contract, right? And now, as you start getting paid, this thing gained you one, almost two. That thing was up about $250 right about here. And then if you cash this on the rebound right there, you made $150. And then on when you try this little move here and it's in your favor, maybe you lose 150. So those two are a wash, but now your collapsing dragon takes over and you make one, two, three chunks, and that's $500. So Neil, I think you're ready for the supported fall crossing in both directions, right? So this one went summer, fall, summer, call that a supported summer crossing, if you will. And then this one goes great big summer, collapses into the fall, turns into the winter. Just short that one, cross the VWAP. It's an owl. Just nail that one, get paid, and then collapsing dragon again on the resumption, and you'll get paid huge. And now you can trade. You're trading the same pattern in both directions. Juan asked me, how do I choose the assets to stock? Take the hybrid course. And how often do I update my watch list? It's the same watch list every day. Maybe one or two symbols change each week. I choose the assets to stock for a dozen different reasons. They're itemized in the hybrid workshop, and that's covered extensively in the 15 hours of that course. Okay, so that's that. So really nice work, Neil. I think you're on it, and you're ready to start exploiting some of these other patterns of the chain trading. Okay. I want to do a similar piece now with, now this is U.S. steel in the morning, and what I want to show you are some important points. This is one of my favorite trader things. So I'm just going to show the supported spring crossing on this one. Okay, supported spring crossing only. What I'm not going to do is show the the rule set or whatever for the collapsing dragon, but that's the collapsing dragon right there, my friends. And if you use this approximately as your risk, you're going to get paid 1-2 full units of risk without trying too hard. And then what you have is a harsh winter. And as was pointed out in the SSC room yesterday, that when these harsh winters move a frog box, then you get big and better supported spring crossing moves. And that's why you kind of want to be ready to trade the collapsing dragon, because a harsh winter that gives you a full frog box move, you can get paid. A frog box is one full position sizing risk. So that means you're typically going to get 3 to 5 execution risks inside a single frog box move. So now you come down here, you have a harsh winter, it rolls over, becomes spring, the PSAR is flipped, you can buy it at 1. Oops, sorry, grabbed the wrong gizmo there. That's our collapsing dragon. So now if you buy that, I'm going to show somewhere in here. You buy that at 1. Now, this is the same issue that I just talked Neil through. If that yellow box represents your risk that you're not going to take more than a 1R loss on, now this one is holding more than a 1R gain. So if you put, and that there were 4 bars up here that it couldn't make a new high at Z plus 2, and then the PSAR flipped, don't let that come all the way back to 2 and scratch, you know? Just get in the habit of making bank. You don't believe in this trade anyway. So instead of watching it go all the way up to Z2 and then PSAR flip and then come all the way back to do and scratch, get a piece of that. Get a piece of that. Because if you got paid in there, now suddenly it becomes pretty easy to see this as your next trade. Because psychologically, you just got paid and you say, oh, all right, that looks like a collapsing dragon to me. And you won't lose money on that trade. You can exit anywhere from the red dot all the way over to number 3, which is a supported spring crossing. And at some point you would have made, your maximum favorable excursion is more than an execution risk. So even if you just say, you know what, I'm going to cover this thing here or at 3, you're going to get paid. And then you just got paid 2 fractions in a row like a broker. Yeah, there was no big move, so you didn't get a big paycheck, but you got it paid a little bit. See what that starts doing to your psychology when you start getting paid, even when these things don't work. Now, here's the next thing that I want to show you. On this first one, the size of the yellow box was the risk. On this one, if we did a collapsing dragon here, the yellow box is the risk. And if we look over here, that is about 8 cents in US Steel. Does the fact that it's 8 cents matter? No. If you want to just round it off to 10 cents, I'm not offended by that. And then use 10 cents in US Steel right now, that's a 1% execution risk. And then you could have a standard position size. So now if you're at 3, I want you to notice something special. The size of our execution risk over here was that, let's call it 10 cents. And over here, if it was the collapsing dragon, it was 10 cents up to the, and I'm just counting it up to the PSAR. And now, if I had tried this one for some reason to go long, it would have been 10 cents. But now at 3, this is where the entry hits. Now I want you to notice that if you buy this one right here, this is about half of the previous box. So you could talk yourself into buying twice the position size. Now here's the math. Let's suppose that you wanted to risk $100 in US Steel. And the big yellow box is 10 cents. You take $100, divide by 10 cents, you could buy 1,000 shares of US Steel with a 10-cent risk. That feels pretty tight. And then if you came over and said, oh, I could squeeze out a 5-cent risk, so now I'm going to buy 2,000 shares. Don't do that to yourself. When you see a chance to get an even tighter stop, just buy the same 1,000 shares, and your execution risk is only 5 cents, so you're really only risking $50. But you still got the same unit of trade at $1,000, and then you'll feel that you're able to manage that very easily all day. Now you're trading off a maximum position size for a manageable low risk idea. So then if you trade it long at 3, and you now can pick up I'm going to use this red dot over here just to or let me get an arrow in here. Stand by. Now, if you pick up Z minus 1 as your risk, you're getting a big payday, because you end up getting 2 full units of gain. And then, even though I told you to still, and that's if you use the 10 cent. But if you had not followed my guidance and then got 2,000 shares, you got 1, 2, 3, 4 units of gain. So pay attention to that lesson and decide what you can manage psychologically so that you reduce your psychological stress. Either way you choose, you're not going to go wrong. So now, yeah, that's what I wanted to show on this one. You end up getting, and then that was if you had just let it come all the way back to Z2. But I want you to notice something else. On the maximum favorable excursion, you have this. So if you had followed the strict rules, you're holding 6 execution gains, and it's beyond Z minus 2. I'm going to tell you, if you were ever going to use a strike exit, this would be the time. If you're holding 3 of these green boxes of gains, and this thing has already moved out beyond the Z3, or Z2, excuse me, couldn't make a new high, so you're holding 3 of these gains right here. This thing pushed out, it's already pushed out one level, pulled back, ran up another one, and made 1, 2, 3, 4, 5 bars, couldn't make a new high. The RL10 rolled over, crossed the baby dragon, and if you're using the Z1 stop, your exit would be back here. Don't give back that much. The Z3 lines rolled over, failed to make a new high. RL10 rolled over, crossed the baby dragon. The baby dragon is sloping down, touches the skin of the dragon, the spine of the dragon, leaves the dragon, hits the VWAP, touches the Bollinger Band mean. You see where I'm going with this? Summer has turned to fall, has come down all the way to Z1, and then exits. Say, well, Ken, my exit strategy was to honor Z1. Okay, I respect that. I'm telling you, if this represented how much risk you were willing to take on the early one, don't give back more than that. You could have at least captured an additional half. So when you're looking for opportunities to strike, it's because you have locked in a really good relaxed strategy with the Z minus 1 stop that kept you in for that whole move. But you got to be able to read the feel for how this thing is working. The other thing I want you to notice is, look at this black line in here. That's your RL30 rolling over after an extreme move. Don't let it go further than that anyway at the VWAP, for crying out loud, and you will make some price improvement in here. Now, Eugene has been working on a project with Dave Anderson to say, how can we simplify the supported spring crossing even further so that it's easier to see the patterns? Because there's a lot of stuff on that screen right there that after trading this way for 20 years, I'm accustomed to seeing. It just jumps out at me. All right, I can't not see it. But that leads you to say, well, maybe what we could do is simplify the indicator set. That's a good idea to get your hands around the pattern, but every good trade-off has a concern. Let me see if I can find it on. Yeah. So this is a beautiful markup from Eugene. Love it. And I just want to draw your attention to what he's done. So he's pulled off a number of the different indicators. So he's got a deeper shaded river, so you can see when things have left the river. But he's taken off the Z2 and the Z3 lines, not using the color-coded RL10, because I don't. This may be. I don't think this is TC2000. But he does have the color codes down at the bottom. But I want you to notice how much different that looks without those color codes to guide you. The one thing that I want to point out on this one is that the SSC trade number 1, winter has, and he's shown winter and spring down on the bottom. And so the entry is right in the bend of this dragon right here. The PSAR is flipped, gets it in right here. He's using the PSAR and makes this move. And now I just want to draw your attention to this note. I noticed after the fact what appears to be 2 exhaustion bars. So that's if we had the Z2 and the Z3 lines on here, you would notice that those 2 bars went beyond Z2, almost to Z3, and couldn't make a new high and started to collapse. That's what it feels like when they start to collapse. The other thing I would do on this one, Eugene, is turn the thick red Bollinger Band mean to a little red dots or dashes so that it reduces the glare. You know that it's kind of there because it's in the middle of that big fat blue river. So that would help actually make the dragon show up even more. That's what I would suggest. What I like on this is the dark blue water of the river really says, that's where you're going to get chewed up if you're not careful. So, be careful. So I just want to say, noticed after the fact. Now I want you to compare that to my carefully chosen example of this one, in which almost the same thing occurs, that after a really nice run up, we get these bars here, these couple 2 bars that have made an exhaustion move beyond Z2, couldn't hold and started to collapse. And then it starts going down that ladder. So in this case, seeing that big, thick red line, you can't miss the fact that that's the boundary of irrational exuberance, and this thing is rejecting that. Can't miss it. The fact that it's rolling over is telling you, oh, the herd's going the other way, and here's the PSAR flip happening. Okay. The other thing we'll notice is over here, the last time that it made that same kind of move, it made 3 bars in a row. Out here in the land beyond Z2, it went surge, 1, 2, 3, couldn't do it. RL10 reversed, crossed the baby dragon, and then notice how far it pulled back. It pulled back from here all the way down to here. That's the size, the magnitude of that move before it recovered. So when we see the same pattern happening again up here, we're not allowed to be surprised that it would come all the way back to the VWAP, which is what it's supposed to do mathematically. So, and any exit inside that green box before it gets to the VWAP, I believe, is going to be better for you psychologically and for your for your equity curve than having been, I don't want to say slavishly devoted to the rules. I don't want to say that, but I will. What I'm going to say is, if there was ever a time to just take it at the VWAP, don't let it go past the fair value. You were enjoying that thing when it was moving away from fair value on the way up. Now it's come back to the fair value. Just take the fair value. All right? Take it right there at the edge of the green box if you must. Don't let it come all the way down to Z2. I'm sorry, Z1, or all the way to Z2 where it stopped. That would have given back 2 full green boxes of gains. Each green box of gain was twice the size on this one. Was twice the size of the gain of the entry. So here's my psychological preference. So this is just my preference. But if I have this entry down here at 3 with a tightly controlled execution risk, and maybe I use the wider stop, my wider standard stop at 10 cents over here, I don't mind a 10-cent generic stop in US steel, okay? But if you now enjoyed from here almost 4 standard gains, that's almost 4 standard gains to the top of the stack. Almost 4. So at least 3.5. Don't let that thing, just because you're devoted to the Z-1, don't let that come all the way back here. Buy it as enthusiasm begins to diminish, not when you have confirmed that pessimism is now back in the house. This little region up in here, which I'm just going to put that yellow chunk on, that little region up there after 3 nice good gains, that's 3 legs up. 1, 2, 3, and collect. Take it. Strike. Because your stop was here anyway because of Z2. And so all you're going to do is reverse that blue arrow around and say, you know what? I'm just going to exit anywhere in that yellow box north of the PSAR or north of the VWAP, and I'm going to preserve most of that nice gain. In fact, what I'm really doing is I'm preserving all of this stuff on the bottom half of the VWAP. And even that one is almost given back a full green box. So I don't even. So what I'm saying is strike. Strike. That's what I'm saying. So I posted this one in Patreon today. This was a lot of important. Oh, I didn't save it. Doggone it. I knew there was something. When it crashed, it lost my little step functions here. All right. That's okay. This is a technique I want to show you. Between 1 and 2, this is using yesterday's Z3 pinch when it was at idle to establish the size of my intraday minimum manageable risk box on the new day. So the new day starts right here at that vertical blue line. So yesterday it was idling around here at about 3 to 3:15. That box is in this is in DIA. So in DIA, from 0.80 to probably 0.30 or 0.40. So that's about 40 cents, 50 cents. So 50 cents in DIA right there. That's actually fairly wide still. So 50 cents. Now, when the new day starts, if that's what it was when there was no directional activity, Let's see, I could. Oh, okay, you're not gonna. It froze. I can now take that same yellow box size and I could do something like this. From the high of the day, um, I could just hang that. And now, when I look at that little swing low from yesterday, I could think about that as a collapsing dragon. And I might just ease myself into a hybrid frog technique using the yellow box from yesterday's idle, just as that was the difference. When it moved more than that, you started getting some signal. And then the reversal was two of those boxes. It idled here. It collapsed below yesterday's support level. It's moving in that direction. That's already breaking through the opening range 5. The rest of the market was suffering. I think you could get a reasonable trade in here like this. You could at least get that green box that I'm about to draw. You should at least be able to get that one. And then when that collapses again, and I'll just use that same standard size box. You'll probably be able to get this green box if you gave back that much. And that's, using a fairly conservative exit. You gave back some stuff, and now you have something like a supported spring crossing happening here. And here. And now at this point, you're noticing that the size of those moves are diminishing and it's becoming sideways. And so now you might just draw this as the decision box and say, you know what? I can just relax and put an alert on that yellow box and wait for it to break out of that before I take the next one. So anyway, the point I want to illustrate there is that's a technique using yesterday's Z3 pinch box to establish your MMRB. That's that technique we covered in great detail in the hybrid box. Yeah. Yeah, the micro contract is nice because now instead of $5 a penny, it's 50 cents a penny, and you can practice the heck out of that, Neil. So once you have a bi-directional set of patterns, you now have the supported spring crossing, the supported fall crossing in both ways. So you want to do summer, fall, summer, or that summer, fall, winter. That's the crossing the other direction. And that gets you into that collapsing dragon pretty nicely. That gives you a low risk standard pattern in both directions. So after a harsh winter, you have that supported spring crossing, which you've nailed. Then after a nice summer, you can take the next leg up. If it goes summer, nice, fall, summer, boom, you're right back on it for the continuation. Or a second position if you never got out. But if that thing goes nice summer, fall, winter, bang. Now you've got a collapsing dragon. You're front running a collapsing dragon. And as long as you adopt this mentality that says, prove to me you're right or I'm out, you don't stick around, and you're not even taking full execution risks anymore, because that thing at a critical state is supposed to work for you right now, quick, fast, and in a hurry. And if it doesn't, move on, because there's 1,000 other symbols that are going to demand your attention. Like, for instance, Devon Energy. Ken, why do you like Devon Energy so much? Look what this thing does. It's not driven by all of that back and forth pressure from the S&P and the Dow 30. This is a mid-cap energy U.S. company. So it's only domestic traders. It's a small component of the energy sector, but it's got a lot of volume. And this thing just trades beautifully. So look at the size of this gap here. It's already not good. Now look at the size of this minimum manageable risk box from yesterday's Z3 excursion. This is the keys to the kingdom. I shouldn't even give this away, but this is good. That's a 10-cent. This big box here is 10 cents. 10 cents at the idle. This gap was almost 40 cents. So hang that 10-cent box from the high of the day. So there's my high of the day. And even if you just take a nice relaxed pattern at 1, what do you have? Luke, I think you're on. Are you listening? No, he's not on there. So what's this pattern at 1? If I got short here, it's a form of hybrid frog. If I got short at 1, collapsing dragon, because of this move right here. Collapsing dragon, reinforced at 2. You might have tried at 3 for the supported spring crossing. But when you get those 2 bars, if you were long at 3, you scratch that thing at 4. You don't even let it come all the way down to here. And now you get short at 4. You get short at 4. And there's your 10-cent risk. And there's your gain. And even if you wait until the supported spring crossing to get out, there's your gain. And now you've got a supported spring crossing at 5 after a harsh winter. Look how harsh that winter was from the open. That thing fell this far. And now here's my risk at 5. I'm not going to lose money on that trade. Now, let's suppose that as soon as this rascal picked up the PSAR, crosses above my entry, and then I pick up the Z2, or I go to no lose plus dinner for 2, I probably take that exit there. I mean, wouldn't you? It had 2 run up. Here's why I want to say that you take that exit. Watch what it does. So here's my risk box, and it's given me 1, 2 units of reward. And if I gave back a full 1, I might have taken this exit. I'm not offended. Or if you waited for the Bollinger Band, you still end up getting a full 1. Or you might have just said, I've seen this game before. I'll just get paid. And now I can start at 6. What do I have? I have another supported spring crossing. And here's my risk unit. So I've now got 1, 2, 3. Maybe this one gets me out. If it does, 8 gets me back in, because why? Because supported fall crossing. Now watch what we have. Summer, fall, summer, fall, summer, fall, summer. So we'll just keep playing that thing. Supported fall crossing. Continuation pattern. Now look what we have over here at 10. Even if you go back to this one at 10, you basically have a Z3 pinch breakdown or a supported winter crossing. So you had this nice grind up. It made a new high, couldn't make another new high, went into the fall, and then right away into the winter. I'm not offended if you take that as your short and you say, you know what, I'm playing this one as the collapsing dragon or the supported fall crossing. Either one of those is fine. And then this one, here's what happens in here. That one I just showed you at 2 was where you were going to get short on the last chart. So that number 2 right there is the number 10 right in here. And that thing is just starting to fail, unbeknownst to you, because I didn't tell you it was a Fed day. Shame on me. So now you end up getting short at 2, and you say, holy mackerel, we just made bank in here somehow. It went well beyond the Z3, and I'm going to get a piece of that. That's the same trade, only in DI or in Brazil, I think it was, that Neil did. Maybe it was Udall. And he got 6R out of the rebound trade. So he got 6R when he entered essentially here going north, and he got 6R out of the second big block, which means there was potentially a 6R in here in a Z3 breakdown. But now, Neil, you should be salivating when you look at 3 and 4 and 5 as opportunities to play the same pattern that you've just learned, but now on the downside. So that's why Devon Energy is and always will be a special for me in my portfolio. Guess what else works? Simon Property Group. If there was ever a pattern I ever wanted to trade in my whole life, it's this one. It starts off with yesterday's idle, the Z3 to Z3 excursion. How big is that? About probably 50 cents ish. So now it moves from the open, at least one of those boxes, and is now clearly collapsing. You're short at 1. Are you going to lose money on that trade? You are not. Uh, if you get short at 2 or put a second position on, are you going to lose money on that trade? You are not. If you get short at 3, are you going to lose money on that trade? You are not. If you get the supported spring crossing either here or at 4, are you going to lose money on that trade? You're not. You're going to add at 5, at 6, at 7, at 8, cash it at 9, and then get short not later than 10. Why? Because collapsing dragon, that's why. Excuse me. So that is Simon Property Group. That's the morning in Simon Property Group. This is that same trade now after the peak, and where you got short on the last one is at 1. Another one short around 2, or at least at 3. Cover at 4. Sideways, or sideways, supported spring crossing here. You will not lose money on that trade. You might add at 5, cover at 6. You get long at 7. You get paid when the Fed announces, bang. Cliff, collapsing dragon. It goes summer, fall, winter, collapsing dragon. This thing is just begging to be listened to. And then if you covered at 2, you get short again at 3 because it rolled over and failed. Or at least short at 4 with a stop at the PSAR. You will not lose money. So that's what I want to cover for tonight. Really nice work from the gang. Neil, you did a wonderful job in there. Use the resources. You put your charts in there. I'm going to give you feedback because you're making it easy for me to talk through your questions and technique. Or if you don't, I'm going to show you my technique, and then you got to learn how to do what I'm doing. Or you can try to do what you want to do, and then I'll show you some areas to consider. Either one of those is a valid way to approach the mastery of the material. Okay? That's what I want to say. I'll get this published and hung, and I'll get the daily reports out quick. I had to reboot again. So we'll get that out pretty darn quick. So that's everything I wanted to cover tonight, guys. Take good. Oh, let's see. Stephen asked me, is a Facebook or a frog Facebook? Is a frog? I got FB on the brain, right? FB is Frogbox, but it's also Facebook. Is it divided by 4 or 5 a good standard execution risk? Yes, I would say yes. And the reason I would say is that will protect you against exploding the account. That means if it goes against you, you only take about a 0.2 or a 0.25 loss. However, you have to validate that against the pattern that you see, because it is like in the supported spring crossing at 6. The reason this yellow box is the risk is not because it happens to be magically 0.2 or 0.25 of a frog box, but it's a 0.2 risk because we assign it a value of 0.2. We start with what is the pattern that determines the size of my execution risk. Then multiply that by 4 or 5. I say 5. Multiply it by 5 and set that yellow box equal to a 0.2 risk. And that way you can safely trade these patterns live until you start building up the repetitions and what the pilot would call building up stick time, repetitions, to start building that automatic proficiency. That mathematical relationship will give you the protection to be able to trade live and learn what it feels like with skin in the game, starting with very low dollars at risk. Very low dollars at risk. Okay? Like on Cliff, it's trading at about $6 or $7 a share. Let's suppose that instead of trading, if I measure that, it's about that's about 7 cents. So let's just say I was going to make that arbitrarily 10 cents. I'm telling you, just use 10 cents. If I traded 10 shares with 10 cents of execution risk, I am risking 1 dollar plus the commission. Your broker should not be charging you commissions to trade, or change your broker. So trade 10 shares of Cliff with a 10-cent execution risk. That's $1 at risk. Think about how much you would pay for a really accurate, high-powered, excellent software system, a simulator that would give you really accurate performance statistics. How much would you pay for that? $300? How much would you pay a computer scientist expert in backtesting with a bulletproof for to take one of your rule sets and run it through his calculator and have him give you a statistical performance of 2,000 trades so that you could get the statistics? And would you pay $300 for that? You probably would. I mean, why not? And then if you read that report and then you went in with full of confidence and you started trading this at 1,000 shares, how quickly would you lose your confidence if it wasn't performing close to what the back testing was revealing? And who would you blame that on? Yourself or the back tester? You'd probably blame yourself. So investing in the back testing and then inferring confidence going forward on the basis of the back test puts you at risk in the emotional center of your body, in your gut. That's the last risk in the world I want to take. So what I would do, instead of spending $300 on that, I would invest $1 and trade this thing forward with 10 shares after I had done enough paper trading to feel like I knew the rules and had seen enough evidence that I could probably trade it. Then I'd put skin in the game and trade 10 shares of Cliff for $1 and then trade 30 times with it according to those strict rules and see what I came up with. And then if I liked it, I would make it 20 shares and trade. I would double my risk and trade $2. You see where I'm heading with this? Then you grow into the size of the position on the basis of forward traded evidence with skin in the game. And if there's a better simulator than reality, I don't know what it is. I defy you to find a trade simulator at any cost that's a better simulator than your actual broker and the real market and yourself, with them keeping score on how they're going to fill you. If you can come up with a better simulator of reality than reality, I'm really eager to find it and use it. Until then, that's the way I'm going to recommend that you consider how to trade forward. But as soon as you got skin in the game, you're in charge, buddy. That's only fair, and that's proper. And I'm trying to set you up for success by showing you how to take on that mentality and develop a bulletproof mind through practical experience without cutting your fingers off. So that's what I want to say about that. So take good care, guys. I'll see you tomorrow.